Hey guys, just want to make a little bit of a video, some more thoughts I guess. Been a while. Been thinking quite a bit about when to sell gold and silver. And it's going to be a bit of a trick because, well, when do you say, okay, interest rates are going back to normal, we've had a reset. I don't think they're going to allow uh, a correction to happen, so they're going to make an artificial inflation, obviously. Anyways, beside the whole point of that, it's a whole different conversation. I'm thinking to really know when to sell is when they start doing the 4 to 5% interest, right? When the yields, I think that's when you really got to start saying, okay, short terms at 4 to 5% historic lows kind of thing. It's time to get out of metals, but also be wary that they could be temporary. They might do that for a couple months and then drop back down again because they, like Jim Rogers always says, can't deal with the pain. The pain's too much. So maybe it might be not, the politicians aren't going to like it, right? And we all say, oh, the Fed's not affected by them, but let's face it, it's government. It's all the same. So you have to kind of watch that too. Like, don't sell your gold and silver too quick in 2013, 2014. The 1650 right now, gold's at, or within $10 to $15, like 1660 today. It's cheap. Like, you should, if you are done with your investing and now just purchasing your money, then yeah, that's a good time to buy because I think it's going to sit this to the end of this year, and it's hard to say because runaway inflation can take it at any time. But I do think we could have 1750 to a 1950 kind of in that range of gold by the end of this year, with silver falling lockstep at 35 to 40. I don't see it. That's the highest scenario. I think you could see over $2,000 if it kind of, well, really, if they don't release QE3 at all and think it's better, and they're blatantly ignorant to the fact, which they won't. They're going to do it. But if they don't, that's a lower odds, I guess. Anything can happen. But in that low scenario, you'll see prices skyrocket because then the inflation finally hits. They can keep on printing this money and doing it. It's when they run out, when the game stops, when they stop getting cheap loans from China. All of a sudden, that music stops, and now they have the inflation. They finally have to deal with it. So now you have to ask yourself, when do I sell? And that's kind of how I'm playing it. I'm a little disappointed in gold stocks right now, like mining stocks, because I was expecting a bit more. Like, I knew they'd still be undervalued, but I didn't think this much. Like, it's a great time to keep on buying. Every big check you get, just dump into mining stocks. I think I could be wrong, and I'll be probably living in a cardboard box in a few years. But at least I'm trying. But anyways, that's my thoughts. My main things are watch those interest rates. Wait for QE3. You're not going to see big gold spikes if they release it. If they don't, then if they do not release QE3, you will have inflation this year. You will have the Peter Schiff thing. But with that election and the 40 elections around the world, there's a lot of political short-term thinking where they say, no, let's do QE3 just before the election. That's my theory. Because right now it looks like we're going up. You see a bit drop, they'll put another one in, and then 2013 you'll see the inflation. That's my prediction. Obviously, no one knows. Obviously, that's just take the information and read it how you want. Everyone has the same information. It's just how you interpret it, I guess. But definitely do not believe the Keynesian theories of, oh, it's all getting better now. People are spending, house prices are going up. No one's getting wealthier. And a whole nother side to this inflationary measure is if China allows their currency to go up to what it should be in a productive society, because it's a production asset-based society, you're going to see, like in the 1970s, you can go to Asia and buy the country with a $20 bill that you found in your back pocket. Well, it's going to go the opposite way now, where they're buying us at their $20 because their currency is going to go up against ours, but but they're not going to notice it. They'll be still getting the same wages, right? So you won't see a wage increase like, oh, they're getting paid more. Is that their dollar is going to rise, and it's going to price us out of the market. We will become serfs in economic terms towards them, as in they have all the power. Though, because they can already consume their own things. If they allow their own dollar to rise, they don't need the Western world. So they can buy their own things. There's no reason why they don't right now. It's actually insane that they keep on taking our inflation, basically, from Canada to the United States. So another big question you got to ask yourself is for Canadians like us, oh yes, we're naturally resource based, but are we going to peg our currency and the idea to keep it low for manufacturing reasons and export reasons? Or are we going to allow our dollar, because we are a productive society, even though we're socialist, with Chinese, because that's the ones that are buying our things? Are we going to grow with them, or are we going to stick with our guns and say, no, we're sticking with our trade partner? So like our day-to-day trading things with the United States and peg our dollar to that one and treat that as our trading partner. That's going to be interesting because they tend to try to keep it around par lately. Like it's before Canada was really successful and we had like 60 cents to the dollar, the American. But lately it's about par because, well, you can only fall so quick. So the next question is, are Canadians going to follow that same premise of, okay, let's keep the dollar on the U.S. parity kind of thing, or around there, or are we going to allow it to go with China? Hopefully, if we have smart people in our economy and our government, which I do not believe, we will go the Chinese way. Not sell ourselves to the Chinese, obviously. Hopefully keep capital investment within Canada, but understand that America, with their foolish politicians, are not going to do anything proper here. But anyways, that's kind of my theory. It's kind of all over the place because that's kind of how my brain works, but you kind of get the gist of it. Just the main idea of this conversation, I guess, was when to sell gold, when to sell silver. And that, to me, is when you start seeing real interest rates rise. But be cautious of temporary ones where they get new elected officials and then they put in their own Federal Reserve people and voila. Things can change pretty quickly. But in all honesty, QE3 is going to come out just before the election. They're going to do this again, and that should be, hopefully, if we have smart bankers and other foreigners, stop buying our goddamn bonds. And that will create the credit crisis, which will create inflation, which then all of a sudden we look pretty smart as Austrians. But till that time, we look like the fools. We will always look like the fools until that inflation hits. And that's how it is. But anyways, guys, I gotta go to work, so many thanks and have a great day.